Welcome back to Futures. Alex Coffey, now joined here in studio by my co-host on NextGen, Jenny Horne, of course, also markets correspondent here for the Schwab Network. Let's break some PPI here, Jenny. Not maybe the market mover that CPI is, and you kind of see that in the reaction. That said, given the news yesterday being warmer than expected, as I was, corrected on, it was not hotter than expected. I'll call this cooler than expected because it came in flat month over month. That's a pretty steady deceleration from the 0.2% rise last time around. And it's also a little bit below the expectation for a 0.1% rise. When you look at core, also similar, although a little bit more in line, comes in 0.2%, expected 0.2%, but declining from 0.3%. Initial thought here as we see the market, I think, pretty much just continuing on the trajectory that it was before.
So, okay, on an unadjusted basis, index for final demand did rise about 1.8% for the 12 months through, of course, September. Within final demand for September, there was that 0.2% increase for the index for final demand services, which helped then offset the 0.2% decline, like you mentioned, in final demand goods. And the index for final demand, less food, energy, and trade services, did inch up about 0.1% for the month after rising 0.2% in August. And the 12-month period through September, we saw prices for final demand, excluding, of course, food, energy, and trade services, actually still increased 3.2%. I always think the 12-month figure is more indicative of like the actual inflationary read than like a month over month, just because that's set to how I think of it as a consumer. But within each component, we did see the index for final demand goods increase, like I mentioned, or decreased, 0.2%, following pretty much no change in August. So this is hugely due to a 2.7% drop in prices for final demand energy. In contrast, the indexes for final demand foods and final demand good actually increased 1% and around 0.2% respectively. So we continue to see actually the index for gasoline dropped 5.6%. Prices for diesel fuel, jet fuel, chicken, eggs, home heating oil, and plastic, resin, and materials also fell. Conversely, the index for processed poultry jumped 8.8%, and the prices for electric power and motor vehicles also moved higher. A lot of the same themes we talked about yesterday with CPI. I do think that this is an interesting read. I know CPI garners a little bit more market attention, but when you overall break down, I just like the individual components. Like again, 0.8% actual for the intermediate demand moved down 0.8%. That was the largest decline since falling 1.4% in May. Most of the September decrease is attributable to energy, which dropped 4.7% as far as intermediate demand by commodity type. So there's a lot to look through in this report. Energy, I'd say, is like my first takeaway here. That's a huge factor for why we're seeing a decrease.
Yeah, and I like that you brought up the year-over-year figures, because now I kind of see why the market's maybe a little bit more muted in the reaction, because they say different things. You actually see a little bit warmer or hotter than expected when you look at year-over-year PPI 1.8% versus the 1.6%, and actually increased a little bit from 1.7, but they revised that figure to 1.9, so that may explain it a little bit. Core as well. So a lot to unpack here. Thanks for the update on some of those internals for what was driving some of those components for this particular report. Market is higher than it was before this release, and you do see a little bit of a bid into the Treasury market as well.